Hi everyone, this is Steven. Welcome back to our Advanced Technical Analysis course. Today we are going to be talking about how to trade Bollinger Bands. This is our first video in Module 3 on volatility indicators. So let's jump right into Bollinger Bands. Bollinger Bands are two standard deviations away from a smooth moving average. So what it looks like on the chart is you'll have an upper band and a lower band, and then a smooth moving average in the middle. Price movement above the upper band may indicate an overbought condition, so you may want to exit long positions or enter short positions depending on the trend. And price movement below the lower band may indicate an oversold position, and you may want to cover shorts or initiate long positions, again depending on the trend. The bands, as you'll see in the chart in just a moment, will contract or squeeze together and then expand. The bands contract when there is low volatility in the stock, and the bands expand when there is high volatility or a large amount of range in the price action in a stock. The assumption is that in a period of low volatility, or when the bands are squeezed together, we will be expecting a period of higher volatility to follow, and just the opposite. When there is a period of high volatility, we'll expect a period of low volatility to follow. This can be very important in options trading strategy. If you are wishing to sell or buy volatility, then the Bollinger Bands can help you initiate those positions. So let's take a look at Bollinger Bands on a chart and how we would trade with Bollinger Bands. Let's use a chart of Morgan Stanley to show how we would trade Bollinger Bands. So the first thing we're going to do is add the Bollinger Bands to the chart. So we click Indicator at the top, type in BOLL, and you'll see Bollinger Bands comes up. So we're going to add the Bollinger Band. And then just as with the ADX, we're going to add the MACD indicator. The Bollinger Bands should not be used alone. They should also be used with a moving average indicator such as the MACD or relative strength indicator, the RSI. So let's add in our MACD, and we'll look, and we see in February of 2018 that the stock began to turn down, as shown by the MACD as well as the stock. I'll add in a trend line to show the stock is moving down. So we have the stock in a bearish trend. As I said, the MACD is also moving down. So we're going to look to short the stock at this point. So as the stock rises, we're using our Bollinger Bands, and as it gets near the top of the band, we would enter our short position. We can use our smooth moving average as a target for our short position, or we can move a stop to the smooth moving average as the stock reaches that point, not cover our short at this point, and then use the lower band as our target. So we would short the stock around 55.5. As the stock moves down to 53.5, that would become our stop to cover the position if it were to move back up, but we don't have to cover there, and we use the lower band down around $50 as our next target. So you can use Bollinger Bands to set a rolling stop as the stock is moving in the direction of your trade. What we'll find is the stock hits that lower band, and then we can use the smooth moving average to reinitiate a position. As the stock moves back up and touches that smooth moving average, we can reshort here around 52.5 and use the bottom band as a target. And at that point, when it reaches that target, we can either cover our position or move our stop down to that target and keep rolling our stop down as the stock moves down. You'll see this whole time our MACD is in agreement with our position. It has gone to a sell and has continued down in a bearish fashion with the stock. Now let's move to closer in time, and we see that the Bollinger Bands have widened as there has been increased volatility in the stock. So now we are expecting decreased volatility at some point in the near future. Our MACD is negative, but is just turning to a buy. So now let's look at a closer in time frame. Let's look at an hourly chart. And we see on an hourly chart that the MACD has already gone to a buy, and the stock has moved higher in the Bollinger Bands. So here on an hourly chart, we may want to wait for a pullback to the 20-day moving average in order to initiate a long position if we believe the trend is starting to change based on our daily chart. We wouldn't purchase at this point because the stock is overbought, but we also don't want to short the position based on our daily chart, which shows that the stock could be turning to a buy and maybe bottoming in this downtrend. So now let's take a look at our 15-minute chart. And again, we have the MACD at a buy. We have the stock in the upper end of the Bollinger Bands, and we again would not want to buy at this point. We will wait for a pullback to this smooth moving average. If we had started looking at the stock here when the MACD just went to a buy on the 15-minute and the stock pulled back to the smooth moving average, as long as we're okay with the daily chart looking like it's going to a buy, we may have purchased here at the 20 time period smooth moving average. So we can use the hourly chart and the 15-minute chart to now determine where we want to enter the stock for a long trade, given that our daily chart may be giving us a bullish indicator. As we can see on the MACD, we actually have a divergence because the MACD has been trending up from this low while the stock has continued to trend down. So that's a positive divergence, and we're looking for the stock now to bounce. So that's Bollinger Bands and how we would use them to trade Morgan Stanley. Thank you for watching this video on Bollinger Bands. In our next video, we'll continue with volatility indicators and look at Keltner channels. I look forward to seeing you in the next video.